think it'd be helpful if you can review what are some of the qualifications for the different tiers of lending, and in situations where a business owner may not qualify for one, but they'll qualify for another. How do you work through those qualifications to help a client find the right loan opportunity?
That's a good question, because most often I'm referred customers from someone else that knows someone, or maybe they got turned down by a bank or a lender, and I'll get on the phone with them and I'll discuss with them what they have going on, what they're trying to accomplish, and I'll find out that they might think that they can't qualify for an SBA loan because their bank turned them down, or another bank told them, no, we can't do this, we're not interested. Well, one of the things that you have to realize is all the banks are federally regulated, but they all have their own internal restrictions. They have their deposit to loan relationships, they have their portfolio, maybe they're too high on that or too loaded up on that industry, and they don't want any more auto shops or restaurants or things like that, or they're done with non-owner occupied investment type properties. So then they tighten the clamps on that underwriting, and they don't really tell the customer why they turned them down or what they need to do or what level of financing they can get into. They just tell them they're not interested, or they're not going to be able to do it. What really needs to happen is someone needs to sit down with them and take a look at their financials, what they're trying to accomplish, and then figure out which of those niches of those banks that they most likely would fit, and they would have the most success to get financing. So for example, for owner-occupied, one of the big things is they always want you to be in business for at least 2 years. And 2 years usually means a couple of tax returns under your belt and good financials, your P&L, your balance sheet, and good financial statements to support those. If you don't have that information, that's probably going to knock you out of the first 2 or 3 tiers, and even out of conventional financing if you don't have those. So that's going to push you more down the road, down to some of these other alternative products that might be a little more expensive, or just it's a stepping stone to get you back up the chain to get you where you need to be. Some of the other issues that you run into is maybe you don't quite debt service the new loan. Maybe you have good credit, maybe you've been in business for a couple years. I have this happen quite often, that they're stifled because they don't have enough space. Or I have a customer that's got in a retail center that has 4 different bays that they've leased, but they're not all together. And it's very inefficient and not a good way to run their business. And if they could get into a bigger space, consolidate all of it, they'd be more efficient, recognize more savings, and grow their business. I've seen that. I've got 2 of those right now. And then on the trucking logistics, anybody that has any kind of transport or anything like that, they're looking for space to keep their equipment. So what ends up happening is they either have to rent or lease yards or different places, and that's just super expensive. So if they had a product to get them to where they needed to be, to get them over that hump, then they could. Some other issues that come up are maybe past bankruptcies, or maybe a tax lien or something that they don't quite have a workout plan for yet, that the banks don't like. There's a level of how everything's underwritten, and anytime you add risk, you're pushing yourself down the tier of it's going to be a little more expensive to get something done. So if you look at the top tier banks, they're going to be looking for all the T's and that have to be crossed, I's have to be dotted. 2 years minimum in business. You're going to have to debt service 1.2. You're going to have escalating, income. If you don't have those and have good credit, FICO's in the 660s and above usually. If you fall out of that window, then you kind of go down the different tiers of lenders and opportunities. But those are definitely things you can work on, and once you utilize one of the other products to get you over that hump, then you can get that next step.